Thus, let me assume three things about this video. Catalyst for Tesla's 2024 decline: anxiety, uncertainty, and doubt. Anxiety that demand will collapse, anxiety that profit margins will shrink, fear that competition will grow, and uncertainty about whether or not buyers truly desire electric cars, uncertainty regarding interest rates, consumer demand in the automotive market overall, and whether or not EVs will be the main source of propulsion in a few years. It's also unclear if the company has truly grown to be the biggest automaker in the world in terms of units sold, or if it will truly become the most valuable in the world. Will autonomous vehicles become a reality? Does Tesla truly have an unsellable lead? The decline in Tesla stock is beyond me. The only thing that moves a stock is the combined buying and selling activity of all the participants in the market. Anyone who tells you otherwise is lying. I have no idea why it is up or down or anything. While we wait, we'd like to highlight some of the companies that many of you hold, such Apple and Tesla, both of which have underperformed in 2024, according to Jay Woods, Chief Global Strategist at Freedom Capital Markets. In summary, the S&P 500 has reached fresh all-time highs today. Really, Nvidia is setting the standard. It's actually rather funny to note that Nvidia is getting excited. A significant change in attention and sentiment in coverage. Although I don't mean to disparage Nvidia, it's a good company, and there will be a lot of demand for their hardware for AI training. I believe that many of the fly-by-night people and or analysts who previously jumped on the Tesla bandwagon after it did more than a 10x in a short amount of time, instead of calling it ahead of time, have now jumped to Nvidia. Of course, the bigger opportunity is undoubtedly not in AI-related training hardware, such as e.g. compute. However, the gear is actually needed for the AI applications, not the Internet's computing powerhouses. That was a significant chance. It was the Internet itself that made e-commerce and massive platforms possible. Consider how many of the largest companies in the world today, measured by market capitalization, are dependent on the Internet. I'm not saying that Nvidia is bad. Rather, I'm just pointing out that it's funny that everyone, including analysts, is suddenly talking about and buying Nvidia. Again, I'm not criticizing. I'm just pointing out that it's interesting to notice that this is almost exactly what happened to Tesla. After I launched my YouTube channel, Tesla experienced a rapid rise and moved from being an obscure brand to one that everyone was talking about in less than a year. The same thing was being discussed by everyone who owned, and now it's not so exciting with Nvidia. Let's start with Apple, which is at its lowest point since October and has dropped over 10% this year. The Magnificent Seven are no longer, and although we saw a nice rotation, we're reaching new highs. I'm glad we can move past the narrative surrounding those 7 stocks, and unfortunately, Apple has given people and investors the Janet Jackson mentality lately. So any thoughts or context could be interesting, if not useful. Currently, Apple's stock is up 20% at $2.61 trillion, up almost 300% over the last 5 years, and up approximately 11% in the last year. However, I believe the all-time graphic best summarizes the situation. Although there have been many ups and downs for long-term investors, Apple stock has returned a respectable 12 cents per share to 169 cents per share since 1984 split adjusted. However, I wanted to draw attention to the fact that given the overall growth in Apple's market cap, and consequently the stock price, it appears, and I mean this, that the company's stock went nowhere until maybe 2005, when it started to move somewhere around here. However, what truly transpired, I just wanted to put some context around some of the comments about Apple stock not performing well and falling from all-time highs. This is, by the way, for a company that, to be honest, has almost completely forgotten how to innovate. Apple stock increased by about 10 times in that period. Since then, it has increased by another 100 times and then some. While Tim Cook is undoubtedly a terrific operator, he is not a great innovator. Thus, Apple will likely continue to profit from the foundation they have laid down over many decades, and I doubt that many long-term Apple stockholders would be unhappy. You're up like 30 times if you've had Apple shares for the last 15 years or so. Not bad. The chart of Nvidia stock has been fairly similar for the better part of a decade. If you recall, this was the era of the TNT. If you look at the chart, you can see that Nvidia IPO at 82 US cents per share and is currently approaching $1,000. It's not very often that you see a chart that looks that similar, which is reminiscent of Tesla's run through 2020. However, to put things in perspective, Nvidia has accomplished in the last year roughly what Apple did in the previous 5. This would never occur if the stock market suddenly realized something. Let's just assume that what occurred with Nvidia was that the stock market realized artificial intelligence, AI, is going to be a major problem. Wait, who? How does AI work? AI needs to be trained to understand what you mean. Several of the products that consumers will need to purchase in order to train AI are made by Nvidia. In theory, Nvidia moons. Imagine if there was anything more that many people were not fully aware will happen very soon and would print a significant amount of money. I don't know. Let's simply pretend that autonomous cars could exist and function in a different version of the game. And I question whether that might ever occur. No, it won't. Let's go on. With Apple stock up roughly 300% over the last 5 years, consider Tesla's stock during the same period. About 850 Tesla and 230% Nvidia. So that the mentality of right here is evident to you. Nvidia to the moon presently. I'm sure many people profited greatly with Nvidia. In complete transparency, I used to own Nvidia stock, but just a very little percentage of my stock portfolio, about 70% or so, is currently invested in Tesla. In the beginning, especially when it wasn't certain that Tesla would survive, I allocated some of my capital to a number of other tech plays. And yes, I did say play. I completed my homework, but it wasn't as thorough as what I've done with Tesla. Looking back at the returns, I believe that maybe 1 or 2 of those would still be in the red if I had held them. Everything else had increased 2, 3, 5, or more times. I was also buying Nvidia at about $25 per share somewhere there. Of course, in 2019, when the price of Tesla stock crashed, I sold all of my other stocks and invested entirely in Tesla. And regrettably, as we seen yesterday, Apple and Tesla are facing significant challenges due to the China issue. He said, concern. Well, what was I talking about before? The catalyst for reducing fear is fear of fear, uncertainty, and uncertainty. The trifecta illustrates how sentiment-driven stocks are sometimes. Sometimes they will coincide with reality, but most of the time there is consensus. Everyone is skeptical and afraid, going against what everyone else is thinking. Celebrate the moon with a sign that will never end. To skip ahead and get to the juicy bit, I like to conceive of a stock chart as tracking investor sentiment or the consensus mood of investors regarding a company. When you ask where the hottest things are, and you know Nvidia is there, Tesla costs $299 and change. EVs is no longer popular. The company's trend and Tesla's fierce competition make this name difficult to analyze. Year to date, it is down 28% after rising 100% the year before, but it is still lagging because it never really reached those all-time highs and made up for the losses from 2022. With Tesla, on the other hand, it is perceived more as a car company, which makes sense given that Tesla is a car company. However, what are they spending $10 billion on this year? Probably just car company stuff, and a fleet of cars that aren't collecting data and won't eventually act as robot taxis with software-like revenues. Indeed, it's just an automobile firm. Thus, this is how I believe to look at it. Since Tesla doesn't have anything to say that Toyota hasn't already expressed, it is becoming more and more just an automaker. Craig Elwyn is a very intelligent guy, and once again, the point is that this is all driven by sentiment. It's true that Tesla is starting to be perceived more and more like a car company. Why is the top question on everyone's mind, and what are the gross automotive margins in the short term? You would think that for GM, these have been dull stocks that have essentially stagnated. However, real investors, those who follow Elon Musk, see him as a visionary, and they consider the technology and traded it like an AI play. The story has changed because they haven't delivered or had the next big thing for Tesla. The sentiment, not the reality, is what matters here. If you haven't been following the developments with FSD V12, then I completely understand why you might believe that Tesla is a car company. I can't wait to watch these videos again and see what people are saying that I was saying a few years ago. Meanwhile, people are worried about whether Elon Musk is worried about too many other things. I would never bet against Elon Musk, but as of late, Tesla has been, missing the mark, dropping the ball, and shareholders are simply leaving, waiting for the next opportunity to buy, which hasn't materialized in the last few months. It's true that investors are leaving Tesla stock, and once again, it's just an incredible decision. I just reiterate market cap. I am really looking forward to it when Tesla calls at $500 billion today in March 2024. In 5 years, 7 years from now, 10 years from now, 15 years from now, 20 years from now. When you compare the $500 billion market cap of Tesla to those future points in time, can you see why the average investor loses money and would be better off buying an index? If everyone is panicking, it's time to sell, so sell. By the way, congrats to the wits who sold Tesla at a price of almost $100 per share not too long ago. This is the time to buy when a stock is rising. Congratulations to Nvidia for reaching 400 quadrillion per share in just 3 minutes. Is it any wonder the average quote investor, also known as a gambler, loses money when they try to invest? This is incredible to watch unfolding in real time over the next 6 months. As of this Thursday the week, Tesla has dropped by about 133%. That's a significant swing, especially considering that the S&P is at all-time highs. Having said that, Apple and Tesla, I'm not sure who this guy is, but it's part of the media experience where you get introduced as the person from the company you're trying to pump. I don't really hate him though, because I've done similar things with my finance business in the past. It's just how you play the game. Buy, sell, hold. What are your thoughts on these kinds of things? I wasn't paying attention to this guy, but if I had to guess, I'd say that he's probably swept up in comparable sentiment. I don't know what he's going to say about Apple, so I'm not sure what he's going to say. But if I were to guess about Tesla, I'd say that he's probably going to suggest holding because it's super cheap, so you probably wouldn't want to be selling. But that's my guess as to what he's going to say if swept up in the same sentiment as many other people in the industry personally. I'm making content for my new fans in order to raise more money to purchase more Teslas because I think Apple will be successful in the long run. As for investors, I don't think they should be concerned about Tesla because it has been a struggling stock. I wouldn't invest new money in Tesla at these levels. Did I call it or say what I was going to say? Could someone please set a reminder to check in again? If I could just instruct my AI to set a reminder every time. Do you know if there is currently an AI that can do that? This video is meant to be a reminder for my calendar, but I could also use it to automate the process a little each time I say something in a video, so here it is. With Tesla's market capitalization of just over $500 billion, this guy wouldn't be adding any more money at this time. Why? I don't know, but I think you know that you can always invest gradually over time and reap rewards. Take a look at Warren Buffett. Do you think he's panicking right now? I don't think so, and I know and believe in that product because it has a life cycle that recurs. I'm not sure what he's getting at here. Perhaps he will elaborate. Perhaps I shouldn't interrupt, but there were over 2,000 people working on the Apple car, and people knew that there was a huge team on this. They've been recruiting and poaching people from Tesla and all over the place, so they'll be fine. They always seem to find that next big thing. And when they do, I bet you they do it the right way. The car made a story too. They got out of the car business. I don't really understand notice by the way that he's talking up Apple, because they're not really doing AI now, but they'll definitely do some AI stuff in the future, aka that's an opportunity. Meanwhile, Tesla, I wouldn't be putting any money in here. What AI exactly we actually rallied on that news and then came back in. Like we knew as investors that they were working on a car, but I wasn't exactly super positive that it would actually ever see the light of day. Well, if it did, they may have something planned, but I'm not sure what it is. Our friend Daniel will let us know after speaking with him, but I do know that they have something planned. I'm not sure what it is, but they seem to have something planned. Wow, That sounds more like hope than strategy. But whatever, he's probably not wrong about Apple in the long run. I can't say that the stock will collapse over time because I don't see the company's value. Long-term collapse because I am unable to declare that Apple is falling. I simply don't think Apple versus Tesla is possible. If I had to choose between the two, I believe Apple is the place you should be. Indeed, the automobile was supposed to be completely self-driving at first. It wasn't even supposed to have a steering wheel or pedals, but instead it became sort of partially driven and is now completely useless, even though a lot of money and effort went into it. There you have it. Fear is the catalyst for Tesla's 2024 collapse, personified. In conclusion, while the recent downturn in Tesla's stock may have triggered panic among investors, it's crucial to approach the situation with a measured perspective. Market fluctuations are inherent, and they often present opportunities for savvy investors to reassess and strategically position themselves for potential future gains. It's essential for investors to stay informed, diversify their portfolios, and, most importantly, adhere to a well-thought-out investment strategy. The financial markets are dynamic, and successful investing requires resilience, patience, and a focus on long-term objectives. As Tesla navigates through challenges, prudent investors will carefully analyze the developments, keeping an eye on the company's fundamentals and its potential for sustained growth in the evolving electric vehicle industry. If you found this analysis insightful and valuable in navigating the complexities of the current market conditions, don't forget to hit the like button and share this video with fellow investors. Your support helps us reach a wider audience, fostering a community of informed and empowered investors. To stay updated on the latest market trends, investment strategies, and company analyses, make sure to subscribe to the Investing Tutorial YouTube channel. By subscribing, you ensure that you won't miss out on future content designed to enhance your financial knowledge and guide you on your investment journey. Thank you for being a part of our growing community, and together, let's explore the world of investing.